Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories behind those dry SEC filings. This week, we're diving into Steel Dynamics' latest report, and let's just say they've been busy putting their money where their mouth is, especially with some new notes on the market. If you enjoy us cutting through the corporate jargon to bring you plain English insights, hit that subscribe button. And for a deeper dive and to chat about these reports with fellow enthusiasts, join our Discord community linked in the description. So what exactly are we looking at here? This is what is called an 8K filing, which is basically a company's way of telling the public about big, important things that have happened, things that investors need to know about right away. Think of it as a corporate public service announcement. In this case, the announcement comes from Steel Dynamics Incorporated, a major player in the steel industry. They've been in business for a while, incorporated way back in Indiana, and they're publicly traded on the NASDAQ under the ticker symbol STYLD. The main event here is about a pretty significant financial move. Steel Dynamics has been busy selling off new debt, essentially borrowing a lot of money to fund their operations and other plans. This filing tells us all about it. They've completed what they call an offering and sale of new notes. Think of these notes as ISUs. Companies sell these to investors to raise money, and in return, they promise to pay back the amount borrowed plus interest over a set period. The first batch of these IOUs are called the 2028 notes. They've borrowed $650 million with these, and they're promising to pay back 4.000% interest each year until 2028. Then there are the 2035 notes where they've borrowed another $150 million. These have a higher interest rate, 5.250%, and just like the name suggests, they're due in 2035. So they've raised a cool $800 million in total from these two note issuances. This whole deal was laid out in a document called a prospectus supplement. It's like the detailed contract that tells investors exactly what they're getting into, the risks involved, and all the nitty-gritty details about these new debts. This was all part of a larger registration statement filed way back in 2022. The actual sale was handled by a group of big investment banks acting as underwriters. You'll see names like JP Morgan Securities, Morgan Stanley BofA Securities, and Wells Fargo Securities. These firms help the company sell these notes to the public, taking a fee for their services. This agreement lays out all the terms for how they brokered this big deal. Now, while the paperwork leading up to this was dated in November, the actual completion of the offering and sale happened on the 21st of November, 2025. It is important to note the exact dates because that is when the money officially changed hands and the obligations became firm. After all the fees and expenses associated with selling these notes, Steel Dynamics walked away with roughly $792 million. That is a substantial amount of cash injection for the company. So what are they going to do with all this borrowed money? A big chunk of it, $400 million, is earmarked for paying off some older debt. They're calling back their 5.000% notes that were due in 2026. This is often a smart move if they can refinance at a lower overall cost or if they simply want to clean up their debt structure. The rest of the money will go towards what they call other general corporate purposes. This is pretty broad, but it can include things like funding day-to-day operations, investing in new equipment or facilities, expanding the business through acquisitions, paying down other loans, and even buying back their own stock. The terms of these new notes are governed by a master agreement called an indenture. The 2035 notes, for example, are essentially an addition to notes they already had outstanding. The 2028 notes, on the other hand, are a brand new issue under a slightly different supplemental indenture. US Bank Trust Company, National Association, is acting as the trustee, which means they oversee the terms of the agreement for the benefit of the note holders. Let's circle back to the interest rates. The 2028 notes will pay 4.000% interest per year, paid out twice a year in June and December. The first interest payment will be on the 15th of June, 2026. The 2035 notes will pay a higher 5.250% interest, also paid semi-annually in May and November. Their first interest payment is slated for May 15th, 2026. The 2028 notes will mature and be fully paid back on the 15th of December, 2028. And the 2035 notes will mature on May 15th, 2035. Steel Dynamics has the flexibility to pay off these notes early in whole or in part. They can do this under certain conditions, and the price they'd pay back would be based on current market rates plus a little extra, or at least 100% of the principal amount. This is called a redemption option. An interesting point here is that if a change of control triggering event happens, meaning something significant like a takeover, Note holders have the right to demand that the company buy back their notes at a premium. Specifically, they'd get 101% of the principal amount plus any accrued interest. This is a protection for investors. The indenture also includes covenants, which are basically promises from the company. They promise not to do things like take on too much secured debt that could put these note holders at a disadvantage, or to sell off too many assets without a good reason. It is about maintaining the company's financial health to ensure they can repay their debts. It is also worth noting that some of the underwriters or their affiliates are already involved with Steel Dynamics. They participate in the company's existing $1.2 billion revolving credit facility. This means these banks have a vested interest in the company's financial well-being from multiple angles. This section simply confirms that the information we just discussed about creating these new financial obligations is true and direct for the company. Beyond the debt offering itself, Steel Dynamics also put out a press release on the 21st of November. This release announced the completion of their notes offering and a specific action they're taking regarding their older 2026 notes. They've included that press release as an exhibit to this filing. It basically reiterates the key points of the debt offering and signals their intention to move forward with redeeming those 2026 notes. This last part is where they list all the supporting documents that go along with this report. You can find everything from the underwriting agreements to the specific indentures governing the notes, and even legal opinions. They've also included a form of the notes themselves, so you can see exactly what those IS look like. Now, looking at this filing, Steel Dynamics is clearly in a growth and refinancing phase. They've raised a significant amount of capital, which shows confidence from investors in their future prospects. The fact that they're calling back older, higher interest debt and replacing it with new notes, some at a lower rate and some with longer maturities, suggests they're optimizing their capital structure. This strategy can free up cash flow in the short term and potentially reduce interest expenses over the long haul. However, we also see a few things to keep an eye on. One, they are taking on more debt. While refinancing is good, they are still increasing their overall debt burden. Two, the new notes will be senior unsecured obligations. This means that in the event of bankruptcy or serious financial trouble, bondholders get paid before stockholders. But after any secured lenders, they also become structurally subordinated to any debt held by their subsidiaries. Overall, Steel Dynamics appears to be executing a well-planned financial strategy. They are securing long-term funding, reducing their immediate debt obligations, and positioning themselves for future growth. The market seems to agree, as their stock has generally performed well. The key will be how effectively they deploy this new capital to generate returns that outpace their borrowing costs. It's a classic corporate finance maneuver, one often employed when a company feels confident about its future and its ability to manage its liabilities. Alright, that is our breakdown of Steel Dynamics' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.